All right, when I started trading, I used to lose a lot until I understand price legs. Now, let me show you something. Now, come and take a look at this. Now, look at this. See, um this is a chart, right? This is a chart, and this is a bearish move. You understand? Now, the reason why we have this move is because of what? The creation of what? Price legs. Without the creation of price leg, price would have moved from this point to this point. Okay, so and we have a bearish move from this very point to this point. And look at this too. We also have a bullish move. You understand? A short bullish move. And the reason why there is movement from this very point to this point is because of the creation of what? Price leg in the market. And you need to understand this. Now, this is where the price is at the moment. Can you see? This is where the price is at the moment, because price has actually been coming down. It has actually been bearish for a time. Then now it seems as if price is about to reverse, to change direction to the upside, right? Now let's take a look at this. Now, if we now assume, for instance, that price is what? About to move to the upside, then we have this swing high, or probably swing point, which is going to be our target, right? So we assume that we want to move from this very point where it is, where price is at this moment, to this very point. Okay, how do we now get to this point? Okay, now to get to this point, you need a leg in the market. So that is what is called what? Price leg. There has to be a creation of legs, creation of price legs in the market that will what? Move price from this very point to this point. It's just like when you are traveling, or probably when you want to move from one spot to another. What do you use? You use your leg. Okay, you use your leg to move from one spot to the other. Or probably you could use a car, your vehicle, your or probably an aeroplane, a bike, or something that could aid you to move from one spot to the next. Okay, that is your what? That is leg. Okay, and it is very important that you what? You understand the market price leg. Without it, you won't be able to what? You won't be able to trade the forex market profitably. And most traders, they don't really understand it. They feel that, okay, the reason why price moves is because of pressure. No, it's not just only that. It is because what? There is creation of what? Leg that moves price from one point to another. So can you see that? So a price leg is needed to get to the swing point. Okay, so now let's take a look at this. Now, how do we get to this swing point? Now, this is where the price is. Now, for this price to get to this swing point, it has to create a leg. Okay, it has to create a leg. Now, when a leg has been created, price is expected to what? Honor the leg before the leg is activated to move, or probably the price is expected to what? Respect the leg before the leg is activated to move. Okay, now let's take a look at what we are anticipating that price should do. So price is expected to what? Come into this leg, then the leg will now what? In turn move to this what? To this swing point. So now let's take a look at this. Can you see? So look at this now. Can you see? It has created what is called what? A fair value gap. Price has actually created a fair value gap, and let's map it out. Can you see? The fair value gap that is created is your what? Is the price leg. Can you see? Price leg, FVG, fair value gap. You understand? Fair value gap is very important. Is very important in the market. Without the creation of a fair value gap, there will not be what? There will not be movement of price. Okay, the reason why we have trending market is because of the creation of fair value gap. That's why most traders, they do away, they don't really understand the concept of what? Of fair value gap. If there is no fair value gap being created, price will not what? Move. Price will only range. Okay, now that we know that fair value gap has been created, so it is a great assurance to us that what? Price will definitely move from this very point to what? Either probably to this destination. Okay, so now this fair value gap, which is our price leg, has to be respected before it can be activated to move. or it has to be honored. Okay, if it's not honored, if it's not respected, it will not move. So what do I mean by respect? Respect simply means what? Price has to come into the leg. Okay, because fair value gap is actually what? It's actually a magnet. So when it magnetizes price towards itself, it is also a rocket. It pushes price away. Okay, when it pushes price away, that is when price reward will begin to trend. They usually say that the trend is your friend. So the only time that is advisable to trade is when the market is trending. Now, for market to trend, it has to create what? Price leg. It has to create legs, which is your what? Fair value gap. So that is why whenever a fair value gap is created in the world, in the market, it is an opportunity for you to capitalize on it and make a lot of money for yourself. Now look at this now. So after the creation of a fair value gap, price came down to respect the fair value gap. So after price has respected or price has honored the fair value gap, now the fair value gap is now activated. The leg is now activated to move. Okay, now this is now an opportunity for you what? To place an entry for a buy. See that? So you buy within a fair value gap, right? Then you Now let's take a look at this now. Look at what happened. So now that price has respected this fair value gap, so what you do now is that what you place your entry, probably your buy limit, okay? Then your stop loss has to be at the swing low. Can you see this is swing low, okay? So swing low, then you target 1:2. 1:2 is more than enough. The distance from here to here is a whole lot of money. And funny enough, this is what weekly time frame. If you are a swing trader, when you place after this leg has been created and you notice that this leg has been created and it has been what respected, just place your trade, then place your parameter, then just forget about it because a leg has been created. Now it is time for price to move. But if you are a day trader, after this weekly fair value gap has been created, just go to what 3 time frames below, which is 1 hour, for your entry. I've taught you entry model on this channel. Just go back to some of these videos and you will see how to what place what an entry. Now look at it. After this price leg has been respected, what happened? It pushed price away, and in the process of pushing price away, it kept on creating what? Legs. So and this the creation of leg gave rise to the reason why price went up to what? To this swing point. So without the creation of a fair value gap, price will not move. Okay, so whenever there is creation of a fair value gap in the market, it is an opportunity for you what? To make a lot of money, because fair value gap creates opportunity. Now let's look at this. Now this is another price action. Can you see? Now, this price action is actually slow because if you notice, you discover that it has just been like ranging because there was no fair value gap created. Okay, so it was kind of ranging and it's still upward movement. So when it got here, so it seems as if price want to change direction, but it has not created a leg. Look at it. Price has not created any leg yet, right? So now let's see. Now, eventually, it created a bearish fair value gap, which simply means what? The direction of this trend has changed. So we'll be trading what? Down. So now that it has created a bearish leg, so it's an opportunity for us. This is now when price will now what? Move. Because along this path, it has been ranging. So now that a bearish leg, can you see fair value gap has been created, so price is now expected to move. Now let's map out the what? The leg, which is our what? Fair value gap. Can you see? So that is our fair value gap. Now we want price to come to respect it, to honor this leg before this leg can be activated to move. Okay, now price will what? Push into it. So this is our anticipation. This is what we are actually expecting price to what? To do, to play out. So now let's take a look at, can you see? Price came into it, as you can see. So price came into it, tapped into it. Now it is time for price what? To move. It's now time for the market to move. So you would have placed your parameter. Can you see? It is the creation of this leg that brought about the what? The downward movement of this market. Can you see? Without the creation of a fair value gap, there will not be what? There will not be downward movement. So as this fair value gap was created, which is leg, you understand? So now there is now it was now time for price to move. So you cannot do away with what? Fair value gap. If you want to actually learn pure price action, you fair value gap is very important. So you don't need indicators, you don't need any other aids, okay? Just your what? Your fair value gap, your price leg, understand the language of the market, and you will be good to go. Now, can you see? So after this creation of this leg and price went down, price has to what? Create another leg to continue. As it created another leg, it kept on creating another leg. This is the reason why we have what? A trendy what? A trendy market. Okay. So a trendy market. Now let's continue. Now we have another one here. Now can you see? So this price has been bullish. Maybe probably you have been making money upward. The reason why we have this sharp bullish action is because what? Is because of the creation of what? Price leg. Can you see? There's a fair value gap created here and it pushed price up. As it was pushing price up, it created another fair value gap, another fair value gap, another fair value gap. It kept on what? Pushing. So when it got here, so there was no fair value gap created. So and it is now eventually created a bearish fair value gap. Can you see it? A bearish fair value gap. Let's map it out. Can you see? Bearish fair value gap. So now we would have to change our direction to what? To bearish, because a bearish fair value gap has been created. Now we wait for price to honor, to respect this leg. Wait for price to what? To come into this leg. Then after it has been respected, that is when this leg can be activated to move, because fair value gap is a magnet, and after it has magnetized price, it is also a rocket. It will push price away. Now let's take a look at the can see price has come into the fair value gap, and what happened? It pushed price down. You understand? When it pushed price down, it kept on ranging. There was no what? Creation of a bearish fair value gap for it to what? Continue down. So then along the line, it now created another what? Bullish fair value gap. Then which simply means that what? This bearish intention has terminated, has stopped. So price is expected to now what? Continue in the upward direction. So let's map out this our bullish fair value gap. Can you see? This is the next what? Bullish fair value gap. It simply means we have to change direction to the buying side. You understand? So wait for price to come into this fair value gap, then before price can what? Can actually move. Now let's take a look at it. Can you see? Price has actually come into this fair value gap. So it's now time for price what? To move upwards. I believe you understand, right? So these are the things that I've taught the traders in the mentorship community. Okay, can you see? Immediately price came into this fair value gap. What happened? It moved. You understand? And funny enough, you would have thought that okay, is it just this small movement? This is 4 hour time frame. If you take this down towards to 5 minutes, you will discover the distance. This is a whole lot of money. You understand? So let's just continue with it. So after that has been created, you understand? So the next, after this move has been what? Has been made, price kept on what? Ranging. Can you see? Now if you check from this very point to this point, you discover that fair value gap was not created. Can you see? Now the reason why this price never moved up or down, it kept on consolidating or ranging, because what? There was no creation of fair value gap, there was no creation of leg. Okay, had it be that price was able to create leg within this, then price will move. Price will start to what? Trend upward, or probably what? Downward. Can you see? So it's very important. So chart pattern traders, now this is now a ranging price. Okay, now how do you know where price will break out to? Is it going to break to the upper side or break to the downward side? It is very easy. Now what chart patterns trader, what they do is that they place their entry here, sell entry, they place their buy entry here. So anywhere price breaks out to, that's where they will trade towards. But you as a smart money trader, an ICT trader, you know that okay, the moment there is a creation of either a bullish fair value gap, that is when you know that what price is going to be bullish. So it will break out to the bullish side. If there is creation of what bearish fair value gap, you know that okay, price is going to what is going to what be bearish. So you are not gambling because you know what you are doing. Okay, now that there has not been leg created, so our price has not moved, price has been captured. So we wait for price what to create a fair value gap, to create a leg. Can you see it eventually created what a bullish fair value gap? So as an ICT trader, you know that okay, price is going to break out. So can you see that? And eventually what happened? So you wait for price to what to honor this leg before it moves. And what happened? They eventually what price eventually move to the what upside. See that? So it's very important. All right, the next video will be coming out soon. If you've not subscribed to this channel, I want you to subscribe now. Click the notification button. All right.